When you're looking to get into the markets, you'll get lots of advice. There are lots of books out there, but one bit of advice from the Buddhist trader is never risk more than 1% of your total capital in any position. And she joins me now, Mercedes Van Essen, author and trader. Welcome. How important is that, do you think, as a trader, that sort of risk factor?
Well, it's basically twofold. It's first to do with your psychological capital, because you need to ensure that your psychological capital remains sound, particularly in these volatile markets, and of course your trading capital. So if you are risking more than 1% on any position, and let's say you have 3 losing trades in a row, well, for starters, most traders simply cannot stomach more than 2 losses in a row, let alone 3 losses in a row. If you then are down, let's say, 20% on your capital or something ridiculous, well, people will walk away from their trading desk, and all sense and rationality will certainly fly out of the window. So 1% is the rule which ensures that you can handle it psychologically as well as financially.
You think no matter how good that trade looks, you still need to hold back?
Well, I think so, because at the end of the day, a stop loss is basically an emergency stop. Because we know slippage and things, I mean, a price can tank through your stop in no time whatsoever. And we have all been there in those moments, the proverbial black swan events. And I mean, they do happen. So I think also, particularly this year, if you look a little bit further into the astrological constellations, volatility is going to be here. The risk of unexpected turns in the markets is possibly higher even than it was last year. And let's face it, last year wasn't a picnic for many traders. So knowing where your stop is, and it's not even that you put it in physically into the marketplace, but you need to know when you're wrong, when you need to go out. And this is where the 1% rule comes in, because you can assess your trade by saying to yourself, right, okay, what is the price at which I know I'm going to be wrong, and in terms of percentage, how much of my capital is this going to represent? So the formula is actually very, very simple. You don't have to employ any complicated mathematics to it. You just have to have in your mind 1%. You do not risk more than 1%.
And that's it, because I suppose a lot of traders, they look at, how much is the upside? But actually what they should be looking at is what is the downside.
Yes, because I mean the upside, at the end of the day, we have no control over the upside. I can look at the next support resistance. Will it go there? Well, yes, maybe no. Does my psychology allow me to stay that long in the trade? That's another story entirely. So no, what matters is if you know what your risk is and you have an exit strategy whereby, say, you take the equivalent of your stop out once you've made that profit, and then let the rest run, or take even 70% of the position off, which works better for quite a few traders, because psychologically you feel much more relaxed, and then it's much easier to let the positions run and wait basically until you're stopped out. But I think to say, okay, risk reward 1 to 3% or whatever, or 1 to 3% whatever, not in these markets. I mean, that may have been of validity some 10 years ago or so, but not today.
If there was another tip you would give, considering the markets we're seeing at the moment, and considering what we're saying about the volatility we're going to see throughout the next 12 months, what would it be?
Well, I would say don't have an opinion. Ensure that you are happy going short and long. The only difference between the two really is that short happens faster than going long. So you need to perhaps be prepared to be a little bit more aggressive with your entry points. However, having said this, when it turns round, as we have seen only this morning, just 10 minutes ago, it happens in a jiff. And you got to be nimble, you got to have the psychological stamina to be able to do it. And developing the psychological stamina is one thing, where risk is important. It'll help you. If you are sound and totally strict with your risk policy, it helps you a lot with your psychological capital.
Okay, Mercedes Van Essen, thank you very much for joining us.
Thank you, Sara.